This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Wednesday morning, middle of the week. We're coming to you live as always from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Nigel, and Rima is joining us now for the next 2.5 hours on Bazaar Morning Call. Guys, hi, morning.
Hi, morning. Good morning.
There's been cricket and now there is tennis, right, Rima?
Absolutely.
I believe you watched the Djokovic match yesterday.
I watched the Djokovic match and I'm very excited. I'm hearing that he's going to make it to the finals on Sunday. So I've got the next few days packed watching it.
All the best on that one. I've missed out on it, so hopefully I'll catch up on some of the French.
Well, I'm such a Djokovic fan that this is his chance to, go one step ahead of Nadal. So I'm really rooting for him.
I'm rooting for the young guy, Rima, Alcaraz.
He's number one. He's seated number one.
20 years old, no weaknesses, absolutely fantastic attitude on the court. I mean, it's just scary, At 20, you're that good. The only thing which can happen with him is that he loses motivation or something. He's already done everything at 20. So to do that, to do the same thing for another 10, 15 years, I mean, that's going to be...
Well, he just has to look at his prior generation, right? Nadal, Djokovic, all these guys won at 17, 18, 19, 20. So.
Absolutely.
And they keep going on. They went on.
All right, well, will the market go on? That is the question, right? You've got overnight things looking, I would say, better. But before that, just a quick word, right? Yesterday, the Nifty and the Bank Nifty saw sharp recoveries in the second half of the day. We saw positive daily closes, but it still ranged kind of price action. And it's been like that for the last many days, which basically is this 18,500, 18,600 kind of range, which has not been taken out in a conclusive way. I'll come back to levels you need to watch out for in a bit from now. Now, the big US indices all consolidated. You look at it and say, well, nothing special. An okay kind of a day. The S&P, the Nasdaq is what I'm referring to. But then you look at some of the other indices and you get a feeling that under the surface, beyond the mega caps, there is stuff starting to stir in the US. The Russell 2000, which is the broadest measure of economy-facing small mid-cap stocks in the US, that went up 2.7%. The regional bank index in the US went up 5%. People have been complaining how the rally has been so narrow. I mean, we included... we put out a piece last week saying that 6 stocks have contributed the full 100% to the S&P's rally this year. Is it broadening out? The regional banks index, that has been the trouble spot, right? That went up 5%. The broader banks index went up almost 3%. So, if this is indeed broadening out, and that, by the way, is still the minority view, if it is indeed broadening out, it bodes well for the health of the overall market. You want a market rally which is broad, not narrow, because narrow rallies rarely last for a long period of time. But it's still too early to take that call, but indications that perhaps that may be the case. Tomorrow we get the RBI decision here, and, it'll be an important one. A pause is expected, but I think the outlook, etc. Keep a close eye on the monsoon progress as well, and we'll put out more information on this one. The Australian Weather Board has basically upped their alert as far as the El Nino is concerned. They're saying that they're a little more worried as compared to where they were earlier, but we'll talk to experts on this. But this is an important input which will go into what the RBI will say in terms of their outlook and what markets will price RBI will do the rest of the year. Coming back to levels, things you need to watch out for. The initial resistance, these are very near-term levels meant for, if you're really trading on a day-to-day basis. Initial resistance is at 18,662. We left off at 18,599. On the way down, the low of 18,464. But this is nothing. This is the range. The high is the 30th of May high, and the low is the 1st of June low. 18,464 basically is the level which the market must protect on the way lower. There are moving averages, etc. as well, but they're far away. So this is the near-term kind of levels which the market must protect. Bank Nifty has resistance at 44, that's not changed, 44,499, 44,500 basically. Bank Nifty is throwing up very confusing kind of signals. It's not breaking out, neither breaking down. So resistance 44,500. On the downside, the Bank Nifty must not close below 43,706. So again, near-term kind of levels to really watch out for as we proceed into the day. SGX is indicating a 14-15 point higher start. So again, like yesterday, same time it was showing, I think, a 20-25 point change. It's neither here nor there. Tomorrow is the RBI decision. So Perhaps we get one more holding pattern kind of a day, just holding on, waiting for the queue to get out of the way, and then perhaps we see a more decisive kind of a view. Rima.
Hi, so I'm going to watch whether the markets can conquer this band of 18,600 to 18,700. Pull up, the intraday highs for the last couple of days. From the beginning of last week to where we are today, the Nifty has made 5 or 6 attempts, and intraday it's gone above levels of 18,600. But most of the closings have been below that level. So it is facing a bit of a congestion resistance level resistance zone between 18,600 to 18,700. Yesterday, the Nifty closed almost at that 18,600 mark. If you add about a 30-40 point up move on the spot Nifty, you would get to levels of 18,640, 18,630 thereabout. But can we go all the way and conquer this resistance zone, this congestion zone? That's something that I will be watching. The good part, as you pointed out from the Wall Street action, was the broadening of the rally. The fact that small caps participated, Russell 2000 with a 2.7% rally. This morning, there are big gains coming through in many of these China-related stocks. So Hang Seng, for instance, that's up close to about 1.4%. You've got gains in the Shanghai index as well. Two sets of news. One, there is hope about a stimulus. And two, Secretary of State Anthony Blinken is likely to be traveling to Beijing in the coming weeks to help normalize relation. And that's one of the reasons why there is so much optimism in, Hang Seng in China this morning. In fact, even the Chinese listed shares in the United States, they have an index over there, and that rallied 3.6% yesterday. The SGX 50, as we pointed out, is suggesting a gap up opening, but just about 30-40 points. But Nigel, yesterday we had that big last 30-minute surge, and it's courtesy for Nifty expiry.
Well, that's right, Rima. The Nifty Financial Services Index, that moved to the high point of the day, and because of a bit of an overlap, you had the Nifty Bank as well that did do well. So the reason that the Nifty ended close to around 18,600 was because the Nifty Financial Services Index, it played out expiry and it recovered from the day's low. In fact, it went to around 19,500 odd, but it couldn't cross that on a closing basis. Now, in terms of trade setup, well, that monsoon fear continues. But on the flip side, globally, there are the probability of a rate hike has diminished now. If you're looking at the data that we get overnight, the probability of a pause has gone up. So that's pretty good news as well. So we continue to trade in a range. But the most heartening aspect yesterday was domestic themes continue to see buy. Cement, autos, both of them were the biggest gainers in trade. And the cues on the derivatives market and live market, you look at the premium on the Nifty, that came down. So you're wondering whether or not there was shorting out there. But actually, there was big unwinding of positions, both on the Nifty and predominantly from the FIs as well, because they lightened their long positions. Close to 13,000 contracts were unwound. Now the markets are mildly net short positioning at close to around 54%. Two strikes I'm looking at, 18,600 call, because the premium out there is close to around 55 rupees. And the open interest is more than a crore shares. And on the downside, 18,500 put as well. So both those two strikes are rather important. In terms of levels, well, we go back to that level, 18,450 on the downside. That should hold out in the near term. While on the upside, you'll be bracing for a breakout only once we get past that 18,670. That's because the recent high is closer to those levels, and the options data as well, with the kind of writing we have seen at around 18,600 call, is indicating that the bears will come to fight in for that zone. SGX Nifty suggesting some green to kickstart trade. I think we are in for another range-bound day, and then in fact over to the RBI governor to give us further direction from there on. Well, let's see how we go from here.
All right, Nigel, we'll keep an eye. Let's quickly tell our viewers what's lined up here over the next 30 minutes. We have updates from global markets, which we will touch upon and wrap up with Richard Harris of Port Shelter Investment Management. Our research team will get you the top list of stocks to watch out for in trade. Devin Choksi will be joining in at 8:30 to address, stocks and, the market direction, what he likes out there. That's at 8:30 this morning.
On the macros, Indranil Sen Gupta of CLSA says the Australian Bureau of Meteorology has upgraded from El Nino Watch to El Nino Alert. The key question is whether El Nino will develop by June to obstruct rain clouds moving towards India, and anyway, the monsoon onset is already a bit delayed. He adds, as El Nino would impact the southwest monsoon and Kharif harvest, CLSA sees a 25 basis point downside risk to FY24 GDP growth forecast of 5.5% and a 200 basis points upside risk to the inflation forecast of 5.2%. Finally, he says this development could push the first rate cut from the RBI from October to December.
For equities, Vinod Karki of ICICI Securities says, given the sharp rally from March 2023 lows, their Nifty target of 20,000 implies a modest 8% upside from current levels. They continue to prefer beneficiaries of the investment and credit cycle in the economy, along with high-end discretionary consumption. They like banks, capital goods, utilities, telecom, real estate, building materials. In terms of stocks, their top picks include SBI, Bharti, BHEL, NTPC, BPCL, Mahindra & Mahindra, Phoenix Mills, Brigade, Interglobe Aviation, Kalyan Jewellers, Jubilant Foodworks, Zomato, SBI Life, IGL, and a few others as well.
Let's get you some money market views on the rupee. Abhishek Goenka of IFA Global says MSCI rebalancing related inflows had resulted in the rupee strengthening to levels of 82.27 against the dollar. However, persistent dollar bids from oil importers have seen it quickly give up gains. Weakness in the Chinese yuan in anticipation of People's Bank of China taking measures to stimulate the Chinese economy has been weighing on the rupee. In this backdrop, it will be interesting to see if the central bank lets go of the ceiling at 82.9 against the dollar in case the yuan weakens further. He expects the rupee to trade in a range of 81.6 to 82.9 against the dollar over the next few weeks.
Okay, this is a call on bonds. Neeraj Gambhir of Axis Bank says the market traded range-bound despite strong GDP data and liquidity absorption by the Reserve Bank. The market will take further cues from the RBI MPC this week, Neeraj adds. While the RBI is expected to continue with status quo on rates, inflation projections, policy stance and language around liquidity management will be closely watched. He expects the 10-year benchmark yield to trade between 6.9 to 7.05% range for the rest of the week.
Well, that's the equity market setup as well as the money market calls. But we've got a lot of stock-specific action that we're tracking for you. We get to that in just a bit. But for the time being, we run you through the list. We're looking at HAL, Torrent Power, GMR Airports, Engineers India, ICICI Lombard, New India Assurance, Star Health, Bank of Maharashtra, and IFB Industries. They're stocks on the back of positive news flow. While on the flip side, you have Gravita. That could be the stock that's reacting to news flow that the promoter sold some stake in yesterday's trade.
Okay, well, Richard Harris is joining us now, Chief Executive at Port Shelter Investment Management. Richard, good to have you with us here. Good morning. Thanks very much for your time. How are things looking, Richard, overall? The rally in the US, as I was pointing out earlier, seems to be broadening out. The Russell is rallying. Between Friday and today, the Russell is up about 5.5%. The Russell 2000 index. You have the banks rallying last night there. So it's not just the mega caps. Slowly seems to be broadening out, which is good news, right?
Yes, it's generally a good technical sign. I mean, it has been noticeable that the key tech stocks have been moving, the stocks really related to AI. And I would guess I would put this down to, an AI move. Some people are looking at AI almost as if we looked at the .com, at the turn of the century. But no, it's nothing like that. But I think AI is a little bit of excitement. It has put some energy into shares that may be sensitive to that sort of thing, or may not be. It just depends how the market's taking the narrative. And that's certainly putting the markets up at the moment. But I see this really as being a temporary respite in an environment that still looks difficult.
Richard, the big cue globally is going to be the FOMC meet, 13th and 14th of June. It's expected to be a pause, but it's expected to be a hawkish pause because traders are anticipating that in the following meeting in July, the Fed is going to go ahead and raise interest rates following the jobs report. So this pause that we're going to get is just going to be for 1 month. It's going to be that hawkish skip. That's the new word that everyone's talking about. In that context, since we are still going to see some rate hikes, do you think the U.S. markets can continue to rally?
Well, the markets have been rallying despite interest rate rises. And I think what's happening at the moment is we are starting to see interest rate rises bite. I know in terms of what I'm seeing elsewhere that interest bills are going up for homeowners around the world, for companies around the world. Big companies are generally protected because they have quite a lot of cash and they're funding in different ways. But interest rates are beginning to bite. Nevertheless, we're still seeing the economies carry on quite well at the moment. We're seeing pretty well full employment in most Western markets. We're seeing huge vacancies too. We were seeing migrations around the world as people are moving to more richer economies, in search of employment, and that employment is certainly there. So this bull market, the long bull market we've had over the last 20 years, is dying very hard. And it's going to be very difficult, I think, for as inflation continues, as it does in this kind of environment, for the Fed really to be able to control it. And yes, I do think this is a hawkish pause. I do think they will have to move forward increasing interest rates. But I think in terms of other markets may have to increase more because inflation is higher in Europe, inflation is higher in the UK. The US has to control inflation as well, but I rather suspect that maybe their rate rises are going to be slower than perhaps rate rises we see elsewhere in the world.
All right. Hi, Richard. Morning. Nigel on this side. Richard, the last time you joined us, I think you were mentioning that you're neutral on China, but still the preference is towards China rather than India, maybe on the valuation front. Has that changed around? How are you approaching emerging markets? And what's the call now between India and China?
Well, Nigel, you have a very long memory. It's always worrying for an analyst to speak to somebody who has a memory quite that long. Yes, I think that was right. I think the neutral call on China was right then. It's probably right now, although, I think one would favor India over than China at the moment. I think the thing that most analysts didn't realize was that the very long COVID restrictions that we had in China, you're talking the thick end of 3 years, has led to a real crisis of confidence. People don't want to spend. They don't really want to invest. The Chinese authorities are now taking baby steps towards trying to stimulate the economy, reducing fees. They're looking to try and get banks to lend more. They're trying to keep deposit rates relatively low so that people don't just stick their money in the bank. So they are taking baby steps towards investment. But I think the worry is we haven't seen the kind of post-COVID revenge spending in China that we saw in other markets. And I suspect that's because people are still very concerned, not very confident, and really just sitting on their hands. So yes, I favor India over China in that basis. I also favor India over China in terms of AI, not because necessarily AI isn't very successful and booming in China as well, but because India will benefit from a lot of the ancillary elements, a lot of the outsourcing elements that will probably come with AI.
Richard, we'll leave it there. Thank you very much for your time. Great speaking with you, as always. And thanks again for joining us here on CNBC TV18. Well, Richard Harris of Port Shelter Investment Management with his perspective. We'll take a very quick break here. Our list of top stocks to watch out for is up next. Our research team will get you that when we are back in just a bit.
IQ Lighting Limited, an Indian manufacturer of LED lighting solutions focused on sustainability and providing low-energy LED products to help India meet its sustainability goals. Initial public offering of equity shares of face value of 10 rupees each through the book building process with a price band of 270 rupees to 285 rupees per equity share. Bid offer opens on Tuesday, June 6, 2023, closes on Thursday, June 8, 2023. For risk factors and more details, please refer to the RHP available on the websites of SEBI, the book running lead manager and the stock exchanges.
The MG Cluster Blackstone. Drive unstoppable.
That's the boss's cabin. The canteen is behind. Good morning, ma'am. Good morning. And you are here. Good morning. Good morning.
मैम और कोई ऑप्शंस
लाइफ में और कहीं ऑप्शंस मिले ना मिले, मोतीलाल ओसवाल आपको देता है ऑप्शंस ट्रेडिंग में ऑप्शंस। इंट्रोड्यूसिंग मोतीलाल ओसवाल ऑप्शन स्टोर विद अ वाइड रेंज ऑफ ऑप्शंस इन ऑप्शंस ट्रेडिंग। एक्सप्लोर करो ऑप्शन स्टोर। Investment in securities market is subject to market risks. Read all the related documents carefully before investing.
Keeping up with the pace of life is not easy. To find the perfect balance, we need to savor the pause. See? It never ends.
इंश्योरेंस कोई आरओआई नहीं है। एमएफ यार चेक कर, हाई होगा। क्या है?
आप बीपी चेक कीजिए, हाई होगा। हाई बीपी से सीकेडी हो सकता है और उसके ट्रीटमेंट से आपका टोटल लाइफ सेविंग्स खत्म। SHI ले लो।
SHI?
स्टार हेल्थ इंश्योरेंस। अपनी सेविंग्स को बचाइए स्टार हेल्थ इंश्योरेंस के साथ। द हेल्थ इंश्योरेंस स्पेशलिस्ट।
Welcome back. Let's talk about individual stock sectors, themes that you should keep on your radar. And one of them is going to be India's defense sector. That's set to get a boost. The White House has given an in-principle approval to General Electric to jointly produce fighter jet engines with India's Hindustan Aeronautics, HAL. With this, the final modalities of the deal are being worked out. Parikshit is here with the details. Parikshit.
Well, yes, this will be a mega defense deal that will be announced when Prime Minister Modi visits the United States for a state visit. And this kind of collaboration is really unprecedented because this kind of a technology transfer has not happened between US and any ally for that matter. So having said that, an in-principle agreement has been reached by both sides. What is significant to note that in 2012, GE and HAL had signed an agreement on collaborating and co-producing jet engines. But the government was not happy with the terms of the agreement, especially related to technology transfer. We wanted greater technology transfer. We now are given to believe by our sources that the terms are now agreeable to the Indian government, and this deal is much better than what had been agreed upon in 2012, and a substantial amount of technology transfer will happen to HAL. When it comes to the site for engine manufacturing, well, an engine unit is already functional in Koraput, Odisha by HAL, and it is possible that this could be one of the locations for co-production. The technology transfer is likely to happen in phases according to reports, and the modalities of the agreements, the payments, the timings of transfer, all of that are being worked on. We believe that the Indian private sector, especially the MSMEs, will significantly gain from it. According to sources, at least 600 MSMEs could benefit from orders that HAL could give as a result of this deal.
Thanks a lot for that, Parikshit. Well, let's focus on a couple of other names. Then Vivek joins us to tell us about Torrent Power, GMR Airports, as well as EIL. Morning, Vivek.
Well, good morning. A few stocks on the radar. First on the list, Torrent Power, important development for the company. They've gone ahead and signed a memorandum of understanding with the Maharashtra government. Now, this is for 3 pump storage hydro projects, and the projects would actually entail an investment of close to 27,000 crore, and the capacity of the project is almost 5,700 megawatts, and it would mark the entry of the Torrent Power Group into the storage solution space. Important to note, this point of time it's just an MOU, so we'll wait out for once the letter of awards do come in, but watch out for this particular name. It's an important development. Also keep an eye out for GMR Airports Infra. A subsidiary of the company, that is GMR Hyderabad, has gone ahead and divested a warehouse facility located at Hyderabad Airport at an enterprise value of close to 188 crore. Also keep an eye out for Engineers India Limited. There's been a couple of order wins that the company has got from both JSPL as well as NALCO. Worth of the orders at this point of time is around 21 crore rupees.
Okay, thanks very much for that, Vivek. Now, the general insurance data came out. This is the monthly update. Yash is with us. Yash, hi, good morning. Seems like the one company which shined was ICICI Lombard.
Well, that's correct. Overall, the data for the industry has been very strong in the month of May. ICICI Lombard has managed to outperform the industry growth. The company in the month of May has grown its premium by about 21% on a year-on-year basis. For the 2 months of the current financial year, the growth has been strong again in both those 2 months. So put together, it's a growth of about 18%. New India Assurance, last financial year was a little weak for the company. The company seems to be finding its feet again. So in May, the premium is up 18%. Underperforming the industry, but it's still better from what it performed last financial year. For the first 2 months of FY24, the premium is again up about 8%. Star Health Insurance, the whole strategy for the company from moving from group to retail seems to be stabilizing, and the traction for the premium growth seems to be coming back. So in the month of May, Star Health has managed to grow at about 16% on a year-on-year basis. For the first 2 months of FY24, the company has grown its premium by about 20% on a year-on-year basis, but still underperforming the standalone health insurance industry.
Thank you very much for that. For more stocks in the news, Vivek is back with us. Vivek.
Well, some more stocks to keep on your radar. Bank of Maharashtra, the company has gone ahead and updated the exchanges, on the issue price as far as the QIP is concerned. So they've announced the closure of the 1,000 crore QIP. It was a successful fundraise. Issue price is set at 28.5 rupees a share. And some of the key participants were LIC, Aditya Birla Sun Life Insurance, as well as Bajaj Allianz General Insurance Company. Watch out for a couple of stocks on the back of bulk deals that happened yesterday. Gravita India, promoter Rajat Agarwal, who held almost 47.8% stake at the end of the March quarter, paired almost 1.8% stake via block deal yesterday. Jupiter India Fund bought almost 10 lakh shares in that particular block deal. IFB Industries, expect some positivity here. Society General bought almost 3 lakh shares in the company yesterday at 800 rupees a share.
Okay, all right. Thanks a lot for that, Vivek. Well, let's do a quick recap then of all the stocks that we just covered for you. Stocks with positive news flow include HAL, Torrent Power, your GMR Airports, Engineers India, ICICI Lombard, New India Assurance, Star Health, Bank of Maharashtra, and IFB Industries. Well, Gravita could be reacting to the news flow that the promoter sold some stake in yesterday's session. That's about the equity markets. But let's get you an update in terms of what's going on in the commodities space. Manisha Gupta joins us as always to tell us exactly that. Morning, Manisha.
Morning, Nigel. Thank you for that. Well, we are looking at the metal prices holding firm. The gold has gained ahead of the U.S. Fed meeting only because there is now a 79% probability of a pause in rate hikes on June 14. But before that, on June 13th, you have the U.S. Consumer inflation numbers as well coming in. So that promises to be a very eventful week there. Metal prices also are moving away from their multi-month lows. We have seen copper extend rebound from its 6-month lows. Much of the negative news market believes has been factored in now, while of course there is escalation in the Russia-Ukraine war, and that could continue to weigh on to many of these markets. But the individual fundamentals are now coming in play, with the street believing that the metal prices perhaps have made bottom for the very near term. Also, a word on the crude oil prices, where we have seen some decline in the Asian markets right now, but it definitely is trading off its lows. While the Saudi Arabia cuts are going to be huge, the other OPEC countries could actually be increasing their production, especially the UAE, Russia, Nigeria, and Algeria, and that is what is keeping the prices in check here. The street will watch out for the Chinese trade data. That is one number that would give you direction for the next 24 hours.
All right, Manisha, thanks very much for that. Just a quick look at what Asia is doing this morning. So I think Hang Seng is the only one which is really up about 1.25%. Some of the mainland Chinese markets are flat, absolutely flat. Kospi is up about 1/3%. The Indonesian market is flat, not very much at all. And US futures are, again, not showing very much by way of traction. The action, of course, in the US was not in the Dow, the S&P, or the Nasdaq, but it was in the broader indices like the Russell, etc. SGX up on your screen, indicating a flattish kind of start. 23, 24 odd points is what we have, with still more than 30 minutes to go for the pre-open session. Devin Choksi is with us of KR Choksi. We'll talk specific stocks and what he makes of the market. We'll also have the management of Man Infra Construction joining in to talk about their next luxury residential project in Mumbai and the business outlook as they see it. Stay with us.
What does your investment portfolio look like without gold? Incomplete. Because as a gold owner, you have the power to make bold decisions. To balance risks and returns. The power to buy and sell, right at your fingertips. Making gold your strategic advantage.
Without which, your portfolio is incomplete.
Power your portfolio with gold. World Gold Council.
If you really are an environment lover, you've got to cut the crap, brother.
The all-electric and environment-friendly MG Comet EV, the no-nonsense car. नई कार तुमने कार इंश्योरेंस खरीदा होगा एगो ऐप से नहीं
आपको
नहीं
नहीं तो
कोई बात नहीं मूर्ति गलतियां होती रहती हैं कोई जरूरत नहीं है चेक करने नहीं मूर्ति कोई फायदा नहीं मूर्ति कोई जरूरत नहीं
नई कार खरीदने से पहले एको चेक करें और 36,000 तक बचाएं।
Keeping up with the pace of life is not easy. To find the perfect balance, we need to savor the pause. See? It never ends.
Yes, it's okay for us to nod for everything. Because we are parrots. Yes, but your wealth manager? Shouldn't be doing that. You know?
Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
Welcome back. Hope you're having a good morning. The SGX is suggesting some green to kickstart trade. Well, plenty of stocks to discuss. So let's start with HAL. That one is up close to around 3% in yesterday's trading session. There's positive news flow that's coming through as well. Devin Chauksey joins us to help us out with analysis on a whole host of stocks. Morning, Devin. Thanks so much for joining in. What's your view on HAL? For the longest time, you're hearing the government is going to be selling some stake. They've done it periodically as well. But the stock just moves northward, now close to 3,400 rupees odd. Your view?
Nigel, good morning. Well, on one side, the company remains absolutely, I think, very convincing from the business point of view, no doubt about it. The overhang continues as far as the stock market is concerned about the sale of shares by the government. Prime Minister's visit to USA is suggesting that he is going to sign some of the deals in which I think the development work for many of the companies, including HL, I think will probably get materialized because of the offset agreement that they have in the defense segment as well. So from the perspective of looking at the business for HL, I feel that I think they are having far better visibility and clarity than they were ever had before in past. Also from the point of view that I think they will be executing significantly large orders that gives a larger amount of conviction for the business prospects of this company. Only caution remains here that the companies are basically having relatively tighter margins because of the government contracts generally they end up executing. They have relatively tighter margins. If as long as they execute larger orders, I think they should be generating higher profits. That is how I look at this company. As of now, I think the business remains promising. I don't know about the valuation currently because we don't have this stock under active coverage at this point of time.
This should be a big one, right? I mean, the agreement between HAL and GE to co-produce jet engines in India. And Parikshit, essentially, our colleague Parikshit, who broke the story, it's a source-based story, essentially saying that there will be a significant amount of technology transfer, which also will happen over a number of years based on milestones, etc. So that's going to be interesting. Well, Devin, good morning. Good to have you with us here. Let's talk about IT, which all sold off yesterday. The index itself was down 2% on that EPAM news. Although I did notice that commentators, through the course of the day, by 3 o'clock, 3:15, when we had somebody from BNP with us, and we put that EPAM lowering their guidance to us, the view was moderating. It was a lot of one-offs. I mean, how they got exposure to markets like Ukraine, which are under pressure, so you can't generalize. So is this once again a bit of a buying opportunity? IT stocks, what's your sense?
Yeah, Prashant, good morning. To me, I think most of the negatives, if at all they are already priced in to most of the IT stocks at this point of time. Many of these companies are having reasonably good amount of clarity and visibility. Given the fact that the technology changes are happening and happening at a very rapid pace in the globe, and as a result of it, the service providers like Indian IT companies are, I think they are having relatively better visibility than ever before. It's quite possible that in some cases you may not be getting the kind of orders that you are supposed to get in a particular period or a quarter. But that's okay. As long as I think the outlook on the fundamentals remain promising, I would think that this is an opportunity for most of the investors who have been basically waiting to buy into some of the IT stocks. Reasonably priced, most of them, including Infosys, TCS of the world, and even for that matter, the mid-tier IT companies, which we like most, I feel that I think they're reasonably priced given the kind of growth that mid-tier IT companies are demonstrating. I would think that I think any correction in the price in general would probably mean that some of the companies remaining attractive proposition to buy into the portfolio.
All right, Deven, what's your view on Coal India? You know, the government of India went ahead and they sold some stake in the OFS. Now what happens is, in fact, the free float goes up. So there will be some realignment, and that's why there could be some inflows. Expecting that today, I'm looking at a Nuvama note, and they are saying that we could see some inflows today because some rebalancing will take place in the FTSE index. Your view on the stock?
Nigel, I think the downside in this stock is not there. That is one thing clear. Even earlier period when there used to be skepticism that new funds will not get allocated to carbon emitting businesses, I think that concern is no more existing right now in the universe. I think people have realized that it is better to deal with the carbon emission than to, I think, prevent the sources where the energy gets generated. So that is also ruled out. So as a result of which, I think you are now likely to see the increased fund flow into the counters like Coal India. That is for sure. However, I think most of the positives, I think, including the price increase, is getting priced into the stock largely because of the fact that I think over there the cost of wages also increasing for the company, and as a result of which I think the profit increase would probably get little bit neutralized, if not completely. So from that perspective, I think the fundamental things are already priced in, as I see at this point of time. Maybe if the allocation of funds increases into this particular stock, then there is a case for some amount of rally, some amount of upside in this particular company. As such, the valuation remains on a lower side, so there is no much scope, I think, for the stock price to go down. It at the most, I think, remains on the sideways for some time. But otherwise, I think it should be a buy opportunity given the prospect of additional funds flowing into this counter.
Deven, do stay on. We've got a corporate waiting by to chat with us. Man Infra Construction has announced its latest residential project in Ghatkopar East in Mumbai. The project will be delivered over the next 4 years, and it has the potential to generate revenues of 1,200 crore rupees, according to the company. The stock closed with just a minor gain of about 0.75% yesterday, but it did close at a fresh 52-week high. To talk about the prospects about this particular project in Ghatkopar East with a potential of 1,200 crore rupees, we're now joined by Manan Shah, the MD of Man Infra Construction, on the show. Manan, morning. This is Rima here. You've given us the revenue potential. Can you tell us what the project cost is over the next 4 years? What are the kind of realizations you're likely to make on this and the timeline of execution?
Good morning. So we expect this project to get completed in approximately around 3 to 4 years of timelines. And it's going to be launched into multiple phases where it consists of approximately around 11 towers, and the carpet area sellable is around 4 lakh square feet. We're expecting a top line of around 1,200 crores to come in from the same. And we expect the cost to be approximately anywhere between around 1,000 crore to 900 crore.
Okay, and the expected realizations?
So it should be approximately starting by next year, which is the third quarter of next year. So the project shall commence soon in the last quarter of this financial year. And we are expecting the realization in the third quarter.
All right. Manan, I think on a realization per square foot, just mathematically, it appears you're looking to sell this project at around 30,000 rupees per square foot. I think that will be the rough vicinity out there. Tell us more about the way you see the company evolving. Earlier you were doing a lot more EPC. Now real estate and EPC is 50% apiece. So what's the direction going ahead? What is more profitable? Because shareholders would like to know that. And also, since we're focusing on real estate, what is your unsold inventory as of now?
So we started real estate approximately around 10 years back with the vision to add a lot more portfolio of the real estate side of it. And now, like you said, there's 50-50 books of EPC and real estate both. The future, what we're seeing of the company is definitely we are more aggressive. We're picking up more and more projects in the real estate side of it. And at the same time, the EPC order book is also strong. And what we are anticipating is we've picked up a couple of new projects, which is at Tarde, which is going to be launching in the next couple of months. We've picked up another project, which is at Villeparle. and we've launched the second phase of our Dahisar project. So approximately around 2.6 million square feet is the upcoming pipeline in the next 2 to 3 years of time, where we are anticipating nearly around 5,000 crores of top line revenues to start coming in. And talking about the future, we're seeing a strong sales happening in the past continuous years, and even currently the unsold inventory in all of our projects has been almost negligible, which is already launched in the past, where the inventory ranges between unsold remains between 10 to 25% at the most.
Okay, Manan, hi, good morning. I just have a quick, you said 30,000 rupees per square foot, right, in Ghatkopar. Your projects are all in Bombay, right, Manan?
Yes, everything is in MMR.
Okay. Have prices kind of flattened out when, basically between, there used to be a difference between prices, is in South Mumbai, Central Mumbai, suburbs. It seems like there are, of course, still pockets of big variation, but generally have prices kind of flattened out. 30,000 rupees in Ghatkopar, there are projects, Central Mumbai, which are commanding that much, even, town side. So I just wanted to get a sense from you. What's happening?
So basically, from western suburb to central suburb and central to the south, we are seeing there is a big price variation, like where Tardev project, like we mentioned, we're expecting a total sales value of more than 3,000 crores coming in next 5 to 6 years of time. And Ghatkopar, we are seeing a 1,200 crore top line, which is say 30,000 rupees a square foot. But these numbers are on conservative basis. If the market seems more supportive, the prices might even increase furthermore, which is highly anticipated. And regarding flattening of the prices, we have experienced a price hike happening, especially post-COVID, because the demands of the housing sector, especially for the luxury side, has gone pretty high. So we have actually not experienced a flattening of price in any of our projects. We are seeing a price hike of at least 10 to 12% happening year-on-year basis at all of our projects.
Manan, can you give us the picture then, some numbers on an aggregate basis for FY24? Last year, you all did 5 projects, 3 residential, plus you delivered 2 commercial projects. What would the similar number stand for? How many projects in FY24?
So we're expecting a similar and a stable income in the next coming year as well. And
so
in
5?
terms of 5 projects, we can say that we will be able to, because there are a lot of projects where half phases were launched. So we would be launching the other phases of those projects as well, like Dahisar, for instance. So if you count it as project-wise, it would be lesser than 5. But if you count launch point of view, yes, we would be able to launch in 5 launches.
So what about in terms of collections? Last year, your collections were about 1450 crore. And you generated a sales of about, I think, 992 crore for the real estate business. And you sold about, I think, 4.4 lakh square feet. What would those numbers stand at for FY24? Collections, the overall sales value, and the carpet area sold.
So we're expecting a sales value of sales carpet area of around 5 to 6 lakh square feet, because we would be launching approximately around 1 million square feet in the coming year, where all of these multiple projects would be launched. But we expect at least 50% sales happening confidently in these projects. And the top line would vary accordingly, as the project pricing per square foot is different for each.
Okay, all right. So in comparison to last year of around 4.4, this year you're saying you'll do at least close to 5.5 to 6 lakh square feet, right?
Yes.
All right. Final question then, Manan, before we let you go. Any fundraising plans that you have? You have ambitious, projects that are coming on stream, but you have an enabling resolution to raise some money. Will you be looking to raise some money, or you're comfortable and you don't need that?
So to acquire the projects, we've actually got surplus liquidity. So we wouldn't be requiring any kind of money to acquire any of these projects. It's still a good cash liquid company, and we've also got zero debt at the holdco level. So debt would be required only if construction finance is required at the subsidy level at any of these particular projects.
Manan, we'll leave the conversation here. Thank you very much for joining in, and wish your Ghatkopar East project all the very best. slip into a break. As we do that, let me tell you what's lined up for the next half an hour on the show today. Coming up, Anuj will be joining in for a quick trade setup. Post that, we'll bring you top stock picks for the day from our technical and F&O experts. Later, we'll decode the stock rally with our Momentumizer segment. At 9:10, Nimesh will be here with the standout brokerage report of the day. And before market opens in CNBC-TV18 Stockport, we'll highlight the top stocks and news to focus on for the day.
इंश्योरेंस कोई आरओआई नहीं है। एमएफ ईयर चेक कर, हाई होगा। क्या है?
आप बीपी चेक कीजिए, हाई होगा। हाई बीपी से सीकेडी हो सकता है और उसके ट्रीटमेंट से आपका टोटल लाइफ सेविंग्स खत्म। एसएचआई ले लो।
एसएचआई
स्टार हेल्थ इंश्योरेंस। अपनी सेविंग्स को बचाइए स्टार हेल्थ इंश्योरेंस के साथ। द हेल्थ इंश्योरेंस स्पेशलिस्ट।
The MG Cluster Blackstone. Drive unstoppable.
दुनिया में कुछ लोग कहते हैं और कुछ लोग करते हैं। जब कहा गया देश में सोलर पावर सफल नहीं हो सकता, तो हमने सुना नहीं, उसे सफल कर दिखाया। कहा देश का सबसे बड़ा पावर प्लांट बनाना इम्पॉसिबल, तो हमने पॉसिबल कर दिया। बोला कोने कोने तक बिजली पहुंचाना किसी के बस की बात नहीं, हमने पहुंचा दी। सवाल उठे एनवायरमेंट फ्रेंडली गैस सब तक कैसे पहुंचेगी हमने वो भी पहुंचा दी। कहा तो ये भी गया पैकेज फूड बिजनेस हमसे नहीं हो पाएगा, लेकिन हमने कर दिखाया। बातें उठी सीमेंट सेक्टर में हम कभी स्ट्रांग नहीं बन सकते, तो हमने सुना नहीं, बन के दिखाया। चर्चा हुई देश में इतना बड़ा पोर्ट बनाना असंभव, हमने संभव कर दिखाया। और जब कहा गया देश के एयरपोर्ट्स इंटरनेशनल स्टैंडर्ड्स के नहीं हो सकते, तब भी हमने सुना नहीं, कर दिए। मुश्किलों की नहीं सुनते, हम करके दिखाते हैं। अदानी, हम करके दिखाते हैं।
All right, welcome back. We've got the SGX Nifty indicating, I think, a flattish kind of start, open at least, 26 points. Anuj is here with a quick check on things, how he's looking at the trade setup. Anuj, hi, morning.
Morning, Prashant. Well, you know what, the market's been stuck really in a range. If you look at the last 7 or 8 trading sessions, the high and the low, it's been in a range. The table will come up for you. 18,622 was yesterday's high, 18,531 was the low, and previously it's 18,640, 18,573, 18,582, 18,478, and if you go all the way down to May 29th, which is when this series started, the high and the low have been in this range, 18,641 and 18,464. In fact, 29th May close on the Nifty was 18,599. That's the first day of the series, and June 6th close yesterday was 18,599. So first day to now series, Nifty has moved all of 0 points, and of course, had a band of 198 points, all of 198 points in about 7 or 8 trading sessions. So I think that's the range that you still have to play. 18,500 to 18,650 is the range that traders are playing with. The first resistance zone today would be 18,625 to 18,650. That's where the SGX Nifty is indicating we open, also along with yesterday's high. The biggest resistance zone, of course, is 18,700 to 18,800, which is when you get very close to all-time high. Support zone comes in at 18,500 to 550 and 18,400 to 500. These numbers look very small because that's been the range of the market. And the Bank Nifty could be crucial because yesterday there was this Fin Nifty expiry move which happened. Normally next day it cools off a bit, but the range to work with for today is 44,000 to 44,250, which is yesterday's range. Higher level resistance, of course, 44,250 to 44,500, and support comes in at 43,800 to 44,000.
Okay, all right. Thanks a lot for that, Anuj. Well, Devin Choksi is still standing by. Devin, thanks so much for waiting with us. You heard the conversation we had with Man Infra with regard to real estate, and they're indicating there's no slowdown as yet. In fact, they're talking about price increases even from here. What's your view on cement, though? Yesterday, that sector did very, very well. A quick check that I did was, in fact, the volumes are a little bit better than what the street was anticipating. And the hope is that for this year, maybe volumes will be better. Input costs we know are a little bit low. And so the hope is profitability will be much better in this year. How do you approach the stocks from here on?
It's a pertinent point, actually. I think on one side, demand scenario remains absolutely very convincing. Infrastructure projects, the real estate construction projects, all of them are asking for higher and higher amount of cement. The larger the company and better the capacity utilization means, I think, higher amount of profit for those companies. That is what I think we understand in this business. We believe that the pricing scenario remains absolutely stable. There may not be a very significant hike in the prices in cement, but at the same time, I think because of the contained input cost, I would think that the margins would be probably better than what we have seen in the last year. Last year has been relatively challenging year for some of these companies. I think this year appears to be relatively better year. Maybe post-monsoon, you should be seeing higher amount of traction happening. And in some pockets, you might also see the price hike, of course, but the demand going to be increasingly higher because of a reason I mentioned about the infrastructure-led construction and real estate-related construction happening in the country as a whole.
Devin, there is a lot of chatter that perhaps we will see increased security now for the Indian Railways. Which could be the potential plays there? Or do you think this up move that we've seen on account of that in certain names, is this just a sentiment driven and really nothing's going to change on the ground in terms of an increased order? Is this really a play in terms of from a market point of view?
So I think the railway segment definitely has been attracting a lot of new products, I think, and as a result of which many of the companies, including some of the newer entrants into the market, have been catering to the railway requirements, particularly I think in the area of the digital products, I think, as I would call it as, I think they are maximum required at this point of time, and some of these companies are relatively, I think, well placed. Recently, we studied one of the Hyderabad-based company, and I guess I think that company is having relatively good amount of traction. So I would probably, I think, second the thought, yes, I guess the railway-related activities are going to increase eventually, and the technology-led product supply would be in demand hereafter. I'm not too sure about, I think, those other products, I think, where the railways are very tight on providing the margin, but the technology-led the components which are going into the, particularly into the security elements of the railway systems. I guess I think that is where probably you are going to see larger amount of growth coming for some of the younger companies which have recently entered into the markets.
Okay, Devin, stay with us. We also have our technical experts with us. Sudarshan Sukhani is joining us, and Shrikant Chauhan is with us as well. Gentlemen, good morning. Good to have both of you here. Sudarshan, if I can start with you. On the Nifty, it's been a bit of middling kind of price action. Although yesterday in the second half, things picked up and we ended higher. There was that Fin Nifty expiry as well, perhaps playing some part. How are things looking this morning? SGX is indicating an open neither here nor there, 20-25 points up. What's your sense?
Good morning, Priyat. See, the Nifty is in a trading range with support at 18,450 and resistance is 18,650. We are very close to the resistance zone. So the Nifty probably has a much better chance of breaking out of that resistance, whether it does that today or tomorrow, because it just needs to move 50 points and that resistance is broken. So my trade is still to be on the long side of the market. Wait for intraday dips, but don't keep it an intraday trade because that breakout may or may not come today. I think it will come tomorrow or the day after. It's imminent. So keep this a positional trade, carry your positions, keep a stop at 18,450, which is the lower band. Use call options so that the risk is limited, but be long.
Okay, all right. Thanks for that, Sudarshan. Shrikant as well is joining in. Shrikant, what about you? How do you approach the indices? And also, if you could run us through your trading picks.
Yeah, good morning, Nigel. Yeah, I think, see, the markets are very clearly indicating range bound sort of activity, maybe because of the expiry which is like there, and also we have to face the major event of credit policy. Whenever the market is around the major event, it trades in a range. And this time, the best part is that the support is shifting from 18,400 to 500. And yesterday we saw some put writing close to 18,600. So if we start sustaining above 18,600, then certainly we are going to see further more activity in the near future. That's the overall view. And yes, the strategy should be to buy on dips. Keep a stop loss somewhere close to 18,500 for the target of 18,700 and 18,800. For the Bank Nifty, the crucial level is 44,300. And today, if we see the Bank Nifty is crossing this level, then furthermore short covering is more likely in the near term. For the trades, I think Reliance Industries did really well. It closed above the important levels of 2470. So from here, the stock can go to the next levels of 2530 or 2550. So it's a buy at current levels with a stop loss at 2440 on the downside. The other stock which we like is SRF, and this one is also close at the highest band of the trading range. So from here, the stock can go to the levels of either 2600 or 2630. So SRF is also a buy at current levels with a stop loss close to 2490.
Okay, Sudarshan, what about you? What are your trading ideas?
Well, BEL is a buy. The stock is already in a sustained uptrend. Very small ranges are really meant for re-entry. So buy BEL with a stop under 115. Dr. Reddy's is after that big sharp decline. It's now coming out of that decline. It's a buy on dips. It's a slightly larger risk, but there's no option. Consider buying Dr. Reddy's. If you want high rewards, then you won't need high risk also. I meant that. Buy Dr. Reddy with a stop under 45.80. GNFC is my only intraday short. The stock has not rallied. It has not participated in the Nifty up move. Intraday short with a stop above 587. And finally, Bharat Forge is on the verge of a breakout from a previous high. So consider buying that with a stop under 790.
Okay, do stay on, gentlemen. We need to slip into a very short break. We'll come back and we'll be closer to the pre-opening rates as well. We'll also be joined by Nrupesh Shah of Symphony to talk about the quarter gone by and the business outlook.